Okay, so I'm going to be recording on my desktop for today. Quick overview of this week's action has been crazy, right? Because last week we had a lot of, what do you call it? High and lows taken back and forth with a lot of consolidation in this range, as you can see on the bottom right here. And we all knew coming into this week there were a lot of catalysts in regards to news. We had FOMC, we had all the other stuff too that I can't list right now. So I'm starting to realize there's once every 3 months there is a good amount of weekly price travel where you can take advantage of price going in one direction, 50 to 30 to 50 points, about those range in a day. And yeah, so today we're gonna start on Monday, so sorry if my let me get my charts in order really quick. So Sunday, I'm recording this late. I haven't had much time to actually trade a lot this week, but the time that I did trade, it was a lot of good setups that came about. Didn't have to put a lot of effort into it, which is a good thing. That's how all trades should be. Okay, so let's go back to here. Oh, there we are. Okay, so again, with all these videos, I'm going to use the replay function just to give you guys an idea of how the trade went, when I was executing it live. Another thing I'm not going to go over yet in this video is risk management. Risk management is going to be huge with these type of setups, because while you can risk one contract, let's say for a potential loss of 2 to 3 points, right? Let's say you start sizing up, which the whole idea of this strategy is to allow you to size up in a orderly and predictable manner, right? Like all these setups I've been pointing out, I've been showing you the top of the breaker, the bottom of the breaker, where you should take the stop loss if that setup starts to fail. And the main problem is it's human emotions and our willingness to let go of a trade or not, which will cause us to have bigger drawdowns than the setup allows. So, but once you get that down, if you think about it, 1 to 3 points of a risk factor is very minimal. Once you start sizing up, one contract, 3-point loss, which is $150. So start sizing up 2 positions, -300 if it doesn't go in your position. But the potential for it to gain and win big has statistically shown to be about 8+ points. Okay, so before I dive too deep into that, I would like to say that I do quantify a lot of the setups that come in day out. The average is really good, man. Like the average risk is showing to be about 4 points, while the average viable profit has been showing to be about 8 points. That is, 1 to 2 risk to reward already, off just the viable profit taking area and the reasonable risk area, assuming your entry is at the breaker. I've seen most of these go and skyrocket. That's why the mission for June was to really try and hold on to a runner as far as possible. It's been tough because that mentality of needing to take winners, which is not bad, is still there. And even when I have, let's say, 2 contracts, I tend to look at the chart too much and take the second position off just a few points away from where I took the first. And then at the end of the day, price just jets. It just jetsons 10 to 20 points. Okay, that was my dialogue. That was my monologue for the beginning. Let's get into it. So looking at Monday's chart price action, let's just look at it really quick. Let's get familiar with this, right? So the highlighted area, this highlighted gray area here that you'll see across these 3 screens, So this is my 1 minute, my 5 minutes, this is my 2 minute. So this is the first hour of the market open, Eastern time. So look at the bottom here, you have 9:30 a.m. to 10:30 a.m. first hour. That's just all it means. This is another strategy that IDR I don't quite utilize anymore, but I'd like to see. It's just nice to see the first hour being marked like this. Pre-market highs, pre-market lows, and the candle bodies. Anyways, let's not get sidetracked. So a lot of consolidation here, right? Not much to trade off of. And thankfully I was asleep this whole entire time. I didn't really pay attention to this. But when I did wake up, I said that I wouldn't trade Monday just because I wanted to open up. And this setup here, or you guys can see the breaker already. There's multiple bullish breakers in here. This setup I saw form, and for some reason I didn't take it. Maybe I just didn't feel like trading. But you know, let me show you right here. We have, I'll draw it out. I'll do a replay and draw it out for you guys. But observe the time, 11:49. So we have our sell side taken here, right? Our swing high right here, formation. Price exits out of the swing high, revisits, right? So after we already have, we have the liquidity grab, then we have the swing high exit, come back down to test, perfect test. You can even call this a fair value gap. If you look at the 5 minute right here, fair value gap. I don't really use fair value gaps, but they do help in more accurate entries. I just focus and stick to the swing high right here. Comes back, tests, you can get in here, set your risk to down here. You can even add in here or get in here, and then the price goes up. So let's play this out. Let's do replay. Okay, so let's go to before formation, right? So you might be asking yourself, how does he know when these are forming? A lot of screen time, man. It's a lot of screen time. You gotta just stare at this shit every single day. Pay attention to the time. Pay attention to how fast these wicks are taking certain areas. And you start to build intuition. The formation itself, doesn't change. Obviously, as you can see, it's always the same. Liquidity grab, swing high, swing low, exit out of the swing high, swing low, comes back, retest, enter, and then go to the viable profit, take profit, and let it run if you have more. That never changes. That formation never changes. It's just the ability to spot it out on the fly is very difficult. So I recommend, if you want to practice this strategy, get a lot of screen time in. And whether that's post-market, when the market's closed, do replay, or whether that's if you have, you have time in the morning, just don't trade, just look at the market, try to mark out things, as I'm about to do right now. So obviously a lot of hindsight bias going into this. I already showed you the setup. But, it's good practice. Get those neurons in your brain fired up. There we go. Look at that, sell side, right? Alright, so obviously when the market is live you can't pause it, but again, when the market is live it doesn't move this fast either. So you have time to draw this out. So this would be marked as sell side. And here would be your swing high formation. Kind of ugly, right? Swing high usually should be 3 candles. The middle candle lowest being higher than the surrounding candle. But you change to a different time frame, you will probably find a cleaner swing high setup form of a 3 candle formation. So here I'm just going to use these 4 candles, and I'll extend it all the way down to the bottom of this wick, all the way to the top of these bodies, and then that will be my bullish breaker potential. call it potential because we haven't tested it yet, right? So of course, like, you're looking at this and you're like, wait, why don't you just enter in on the sell side? And realistically, to you, I have been trying to actually get a little bit more aggressive, right, with my entries, getting in on the sell side here. So let's say, for example, go back here, price took that low right here, that sell side liquidity, and comes back up. I can have a stop order here that triggers, that says, okay, if we go lower than here, then I want to get in here, right? I want to get into a long one contract here. It's a pretty good risk if you think about it, but you never know how low that sell side is going to go, right? You never know how low the liquidity grab will go. In best case scenario, we only have a 1 point delta, which is this case right here, 4358.25, 4357.50. We have a 1 point delta. So even, let's say you got in here, great risk right here, great stop loss, I mean. All right, you get in here and you don't want to necessarily place your stop loss here. There are times where the liquidity grab zone does get retest. Those breakers are a little more sloppy, but again, it does happen, right? Those wicks will come down here and the body ends up being back in the breaker block. So let's say you do get in here. This is a great risk profile right here, 1 point risk. I would have done it, but again, I didn't trade Monday. So let's continue. So now let's go back to good behavior. Good behavior is always, let me use this video. I know it's going to be long. I'm sorry. I'm still learning to be concise with my words, but there's a lot of thoughts. So number one, I'm going to mark this out and start doing this so you guys can get an idea of what I'm looking for. Liquidity grab. Number one, liquidity grab. These terms are all ICT based terms. I may be using it incorrectly sometimes, but the idea is the same. I'm not going to teach ICT here. He has a lot of great videos. You guys can go watch his 2022 mentorship. That's where I learned everything. Did my own practice last screen time to get this down. So number one, you want to watch for the liquidity grab. Okay. Number two, spot out your swing. Well, because this is a bullish breaker, BB plus, it's going to be a swing high that you're looking for. If it's a bearish breaker, it's a swing low that you're looking for. So number two, spot out your swing high. Mark it on the chart. So I marked it on the chart, right? I told you this from here to here. These two candles low. These two candles low is higher than the lows of the surrounding candle, making up a swing high. Okay, so that's my region. This is where I want to enter. So if you look at what is my risk profile, I'm looking at 4360, 4358. This is a 2 point risk profile, man. This is something that I would size up on 6 contracts even, because I do have the account capacity to do so. So again, go based on what your account allows you to do. Don't go based on what I do. But for me, anything less than a 3 point risk, I will go 6 contracts deep. Anything that is more than 3 points, I try to at least do 2, but anything more than 3, it's 3 to 5 I'm still comfortable, but anything over 5 to 10, which is above average of what my risk tells me in my statistics, I will usually just go 1, right? I don't need to risk that much, because again, there's all these good setups that pop up once in a while. Not once in a while, almost once, twice, 3, 4 times a week. So let's play it out. All right, so let's enter here. I say let's enter here because there's this volume imbalance here on the 1 minute. It did get rebalanced here, but I think that's the best entry right now. It lowers my risk because since I enter in the middle of the breaker, right, and I'm using the bottom of the breaker as a sign for me to get out. This lowered my risk. I would have entered normally at the top here, and then used the bottom of that potential breaker as my sign of getting out. So I can even add in here. Because why? Because we're still in the breaker. We're still retesting it. Of price goes up, that's validation. Stay in the position. Let's write it out. If price goes down, breaks through the bottom of the breaker, then I need to eat those. I need to eat my loss there, right? So I know some of you guys, professional guys, might be thinking right now, if you take 6 positions now, but then take 3 later, and your risk profile changes. There is some math to it. That's why I try to average. If you know the risk profile is less than 3 points, I try to go higher. But it really depends on my entry here, because even if I had sorry, this is a 2 point. Even if I had a 2 point breaker, if I don't get a good entry, I usually don't want to even size up. It's a little late. I'll get into those more later, but you guys get the idea. Manage your risk. That's always what people say. Okay, so let me draw this out right here. Number 3, retest. Sorry, this is number 3, right? And then number 4, you can say entry. Okay, let's watch it. We can pick up the pace. We don't need to wait. We don't need to wait for the whole thing. So it's a little bit tricky here. You know, there's no viable. There's no clear viable profit area yet. Oh well, as I'm saying that, I'm just looking at it now. This previous high right here would have been a good area to take some partials, right? So what is this? Let's draw it out on the map chart right here. So you have 4362.75. The top of your breaker right here is 4360.00. So from the top of the breaker to this, it's not great, but not horrible. 2 to 2, right? 1 to 1 are not great, not horrible. But let's consider this for a little bit. Think about the mentality that I'm trying to shift now is think about, with every position that you enter, what is the risk that you are 100% comfortable with, that allow you to continue trading at least 5 more times, that won't blow your account. If you start to think that way, then you no longer really focus on what the profits will give you. You start to focus on allowing your position to run as far as possible. But of course, take partials. Like, don't. While I'm saying this, I also want to remind everyone, take partials. You know, I can take 3 off here, so it's all 3 right there. This is all simulated, of course. You know, easy money simulated, but take partials. But start to think of, if this position goes back and I take an L, will I be able to trade again next time, right? And if the answer is yes, and you feel very comfortable with that, then there should be no problem letting your position ride, as I'm doing right now in the simulation, because you've accepted your loss 100%. And you know, now that you're not really focused on how much money you're going to be making, but rather how much you'll lose, and the fact that this type of setup tells you, this type of setup tells you that each win that you hit is substantially greater than the risk that you're taking on. Meaning that even if the math is not concrete here, but even if you do take on 3 losses and you have 1 win, you'll probably be back to break even, right? And again, that's assuming you execute as best as possible. So let's just flatten it here and pause the simulator. If I had traded this and taken on this size of position that I've shown you, that's a net of 5,000. But on Monday I did not trade. You see how comfortable that trade was though, as I was talking through it. You know, once we took that breaker, went up, we retested down here into this VI. Let's draw that out. testing says VI. Rebalance actually is the word, not tested. We rebalance, price rebalance into here. Good area to add, right? Add here, set your stop loss here for those positions. But notice, like, if I had just stuck to my gun the way I did with this trade, with every trade, and told myself, if this position doesn't go right, I will lose 2 points out of those 6 contracts. Okay, so 600 bucks. I'll lose 600 bucks. Am I okay with losing 600 bucks? For me, that would be a 1% loss on my account, and that's fine by me. That is a risk that I am willing to take, right? And because I'm focused more on the loss, this win, I can let it play out. I can let it play out, take partials, move my stop loss up, because I'm not focused on where I'm going to be taking the profit. I need to let it run, especially on days where it's very trendy like this. You need to let things run, but it's hard to focus on letting price run because your instincts is telling you, hey, take it here, take it here, take it here. While I'm going to stress good risk management, take partials, move your stop loss up. But yeah, focus on how much you're willing to lose. Focus on that, and you're going to allow yourself to win big like this. Okay, let's move on. So I'm already fucking 20 minutes into this. I'm talking way too much. Okay, let's move on. So get out of replay. So that was Monday. Beautiful, right? So after Monday, I'm going to pull up my daily chart here. After Monday, we had this, again, another beautiful Tuesday. Let me see if I can bring my... So I told you guys I'll be making a raw, uncut voiceover. This is my raw, uncut voiceover. A lot of jibber jabber. Alright, okay. So okay. I'm looking at this straight off the bat. You should, I don't know if you can see where the breaker is. Just off the 1 minute. I'm not even gonna pull off the high time frames here. Just off the 1 minute, you can kind of see where it is, right? So, give you a few seconds before we dive into it. Hindsight bias. We know where price is gonna go, but let me try to demonstrate, at least with this example, because I traded this, where I would have taken profit, and how I would have let my runners ran if I focused on the loss and not on the win. So again, weird thinking, but I promise you this type of thinking is going to allow you to let your runners run and take advantage of days like these, right? So all right, let me go into replay mode. So I'll start off here. I won't spill the beans yet of where the breaker is. If you saw it, good for you. If what I'm about to show you is on par with what you had in mind, then that means you're catching on. Okay, so play that shit out. Straight off the bat, we got some sell side, some buy side taking up here. Right here. So I'm just marking it as we go. I'm not giving it much thought. I'm not thinking about a trade right now. I'm just watching. Sorry, I'm just watching. Trying to draw my lines, right? Alright, so here's so I'm gonna pause it because this price action's the speed is going too fast. Alright, so this is volume imbalance. As you can see, price is coming back down here, rebalancing, very aggressive. Price is going down very aggressively. All right, let me slow it down. Very aggressive. To me, in the past, this will look like price is breaking down and probably wants to go lower. Fair enough, but we should draw lines to kind of guide our eyes and our mind with what we know. Okay, we rebalanced here, took some buy side up here, took some sell side down here. Okay, and down here took another sell side, right? So anytime liquidity gets grabbed, what I tend to do to spot out these breaker setups is quickly look to your left, right, of where that liquidity where that area of liquidity. So in this case, price zoomed down here, taking this low out, right? So this is the sell side. I look to my left. What is the swing high here to the left? It's really it's hard to find. It's not clean. This is not a swing high. This could be a swing high, but a lot of volume a lot of liquidity has already been kind of sucked up here and built for something else. So I can just ignore this. This isn't really telling me much, right? But now zoom in here, zoom in, and let's go to this sell side liquidity grab here. Right here is where it got taken. Look to the left of it. Right, look to the left of it. Sorry, I just kind of confused myself there. You don't look to the left of this. You look to the left of where the sell side was taken. So right here, right? Right here. These are all swing highs, actually. What am I saying? It's late. Okay, but this is a lot cleaner down here. The sell side. Look to the left. You have your swing high. Let's draw out our swing high potential breaker. And as what can we see here? We have an overlap of the bottom of the swing high being the same as the sell side liquidity grab zone. This happens sometimes, and when it does happen, I don't think much of it. It just means that I need to time my entry a little better because there's not a lot of room for slippage down here. So if you look at the risk profile, 404,398, right, that's roughly 6 points, 6.5 points. This is pretty big. So we wanted to get our entry in, size it proportion to the risk. So I'm only going to go one. I don't need to go big on this. Actually, let's do two. My account can handle two. Okay, so what are we waiting for, right? We're waiting for, first off, liquidity grab in the form of a sell side liquidity grab. Secondly, your swing high in the case of a breaker, bullish breaker. Okay, what's next? We're waiting for that test. We want to exit out of here, wait for that test. This is giving it a hard time because we had that volume imbalance earlier. So you can start to risk on here, get in, but there is a volume imbalance down here that I would have set a buy order. Oh, as I'm saying this, it's trying. But again, right? We're in the breaker. We're in the breaker. We're fine. The size of the breaker is 6 points. I've accepted that I will lose up to 6 points times 2. 6 times 50, 300 times 2, $600. Two positions. If this goes south, I lose $600, assuming I exit here. But because I got inside the breaker, I have a better risk profile here. So we retested right here. We exited out of the swing high, retested, tried to rebalance, kind of failed, didn't, not great. The setup is kind of choppy. So now let's look for viable profit taking areas. So all these areas right here, these swing highs, are areas that you can call your viable profit taking areas. So I feel safe. I've been talking a lot. I kind of missed my partial exit, but I would want to sell one here at this area right here at 4411.75. Because that is still a good 8 points I'm good with 8 points. I'll take 8 points any day, right? 8 points with a 6-point risk profile. So I just want to take partials up here at the first viable profit. I was talking a little bit too much, so I missed my exit, but all right, take it there, and then this is what I would do. Since in replay I can't do it, but in replay or in when you're trading, you can set your stop loss. I would set my stop loss at break even. All right, so my next viable target would be up here. This previous buy side. You guys can kind of see the rhythm of these trades, right? They're tricky because you need to watch them form. They're tricky because sometimes the validation takes a little bit. So flatten. So this trade 1.2. I actually risked a little bit more than what I showed here. I think I took on 4 positions because I had a good entry down here. So there's a rhythm to these, right? You wait for the formation. You just watch the price do its thing, and then once price tells you, hey, there's a liquidity grab, and it comes back up and says, hey, I'm trying to exit out of that previous swing high, that's your 2 signals telling you to keep your eyes peeled and your attention close to this. Okay. Once you see these 2 happen, then you see that retest, you can enter early in on the retest. But what I like to do to kind of build up capital, if you're there, is wait for the validation. Validation meaning get out of that breaker area. You can have a stop order so that when after price exits, right? After price comes out of the swing high and goes into the retest, have a stop order at the top of the breaker. So when price does come back up, you don't miss this entry, right? You want to at least try to capture the top of the breaker if you're in a bullish breaker. Then they'll give you that absolute risk profile of 404 to 398, because that's what we're looking for here. Again, how much are you willing to lose, right? How much are you willing to lose on this trade? And focus on that. Once you focus on that, your mentality of trading will shift substantially. All right, so that was Tuesday's trade. I kind of have a cheat sheet right here on the side. I have all the trades that I have jotted down that I took this week. I'm pulling them up. Okay, so I don't think I recorded it. Okay. Oh yeah. So this was the next one that we're gonna get into. It's scary. I say scary because I've blown accounts trying to trade. News days like FOMC. Yep. Never turned out well. But I think I finally stopped the my degeneracy. Okay, so let's go into Tuesday. No, Wednesday. Sorry, it's Wednesday. All right. So the problem that I always had when it came to FOMC was I knew that we would get massive movements. Like, say for example, looking at this in hindsight right here, we have this giant move down when news came out, and the gambler inside me would always try to capture this. But mind you, this is not how it always plays out. You kind of rewind to previous FOMC days. You know, you might have a quick move down. Jerome says something, and then price quickly reverses back up, take liquidity up here, comes back down. It's a quick way to lose money. It's a very quick way to blow your account, and the best way of trading this is to either get into a position beforehand, have a stop loss, and respect that stop loss. Don't try to get back in if you get invalidated. Or, honestly, the best way to trade this is to not trade it. Because let's think about all the setups that I've been showing you, right? all the points that we've been comfortable risking and all the points that we've been profiting, right? You don't need this movement. You don't need to capture this. You could. I mean, you can have traders that tell you, hey man, I just caught this, 30-point move down. It's a great story to tell to your friends, but it's the same as rolling the dice. It's better to just kind of avoid it. But with that being said, after the news comes out, you have some pretty gnarly action that you can capture. This is when price action comes back to reality, and you can start to draw out your lines, start to see where price is trying to move, and use the same setup that I've been going over in this video and the previous video. So let's get into it. This is start of the day right here, Wednesday. Pretty good movement. Nothing that I caught initially, even though there's a breaker right here. You can see it right here, right? So this is 30 minutes after the market opens, which is in line with the Pacific time 7 o'clock hit time. So it's in line with that, right? If I was awake and I wanted to take a trade, this right here with the liquidity grab to the sell side down here, swing high up here, price exits out of the swing high, comes back down, tests right here, and then boom, goes up. Yeah, that's a good trade. That's a good setup. That's a good trade. That's a breaker right there. But I didn't take it. A little choppy. I would have stayed in the trade, but a little choppy, right? This chop right here. Ask yourself, be real with yourself. Would you have stayed in this position, or would you have gone out because your fingers were tingling and saying you don't want to lose this, you don't want to lose this? Anyways, that's another discussion. All right, so coming back to FOMC. Okay, so Jerome Powell has the power to do shit like this. So let's measure this move. 4423.25, 4423, 428, 4383. That's 40 points right there. 40-point move down. Equivalent in SPY, $4 move down, right? It's pretty good profits if you have puts. Now, do you need to capture this? Again, do you need to? Think about it. Before we dive into that, let me show you something cool. I actually played this. This was, I believe I made 6,000 something that day. I was very close to hitting 5 digits, but I didn't want to hold on to as many positions as I had, even though the risk profile was really, really good. So let's look at this, right? Wednesday. So if you look at the bottom right side of my screen, you have this daily chart. So this is not in replay mode on the bottom. As you can see, this is what has happened already. This is in replay. This is not. Notice this volume imbalance down here, right? Volume imbalance on the daily. Notice where I have it marked here too. So this is actually, let me see if it's merged. Sync and layout. There you go. There you go. Okay. So this was my thinking, as with all volume imbalances. I waited for FOMC news to come out, okay, and I'll just show you what I did. Boom. Quick 3,000. Now you're probably asking yourself, wait, why'd you do that? You just said don't trade the news. So by this time, 10 minutes has gone by. I'm playing price action here. I'm solely playing price action here. I knew price would rebalance down to here, into this volume imbalance. And on the first sight of this price going back up, again, we're in replay mode. It's kind of hard to be granular and intricate with my entries and exits. When this isn't going on, in real time, you can see this wick form. You can see then price comes down here. You can see then price goes back up here, giving you enough time to time your entry. This is a little bit more exaggerated, but anyways, the point here is that price went down here, okay, into this volume imbalance on the daily. Price went down, and then I was anticipating for it to come back up using the low of the two candles here as my stop loss. So what is it, 4388 and 4383, right? That's 5 point, kind of high, but volume imbalance on the daily. That's a higher time frame that I had. Higher time frame, volume imbalance, rebalance, and then they shoot back. It's been a thing that I've seen happen a lot. But let's say that didn't, let's say it went south. What I'm risking here is 5 points, 250 times 6, okay? So I'm risking that much. And if your account can't handle that, don't play things like this, because it can go south on you. When you do, you have to be quick to get out. And even this, I kind of wrote, I didn't write it all the way up. I just knew that I can make a quick buck. So in here, this enter and exit is 10 points, but I actually only wrote it for 7 points. So I stopped, I got out. My homie Cut can back me up on this. He got into he got into calls on his broadening formation, and I got into long position. So I got out, collected my profits, and I waited because news just came out, and there's no setup yet for me to take except for that one setup, and I don't know where price will go, right? And I'm not too comfortable with the risk, but at the same time I knew I can make a quick buck, so that's what I got in on. This is out of the strategy of breakers, by the way. Don't tie this in with breakers. This is a volume imbalance, rebalance, quick assessment of risk, enter, quick assessment of profits, take, and then wait for the setup. 42 minutes. Kind of makes sense. I'm going over multiple charts all in one video. So, hey, what can you do? All right, let me pause it here. So we're straight off the bat. There's a sell side right here. Boom. Okay. Where's the swing high? Not the cleanest, right? Not the cleanest. Watch this. Let's get into here. Oops. Okay, well, I meant to get in at the in the breaker, but again, it's kind of hard to time these things when you're in replay. So what is the risk profile here? 94, 88. Ugh. Not great. This is 6 points of a risk profile because these moves are giant, right? But this is the trade that I took. Let me see. I added in here somewhere, but let's for the sake of this video, let's just keep it like this. I targeted for this top right here, and I got ready to get out 2 partials. Whoops. Dang, it's getting late. I thought we were up here already. Anyways, the point is I would have taken 2 up here, taking partials up here, and then let the single ride, let the ride go up, and set my stop loss at break even. Again, you guys are getting the rhythm of it, right? I mean, you're seeing what I'm putting down here. Now ask yourself this: you missed this move right here, and price just gave you an opportunity to capture all that again with the 6 point risk, right? What do? You get in, man. You get in on these. Wait for that setup, right? So the narrative always is, where is price trying to go? And is there going to be a setup that allows you to take that ride to that target price? The narrative here was that FOMC came out, we had our initial move, we waited for a setup because the narrative is that I want to take this buy side up here. I want to take it. I want price to go back here. That's the narrative. And if price gave me a bullish breaker block, then I'll take that bullish breaker block, accept the risk, and ride my positions out. So this is equivalent to how much I made, but the exits and entries are not accurate to the actual trade. All right, let's fast forward. I've been talking for 45 minutes. Okay, let's go with Friday, right? Sorry, Thursday. Today was a massive day. Look at the bottom right of my screen. Bottom right of my screen right here. What is the range that we traveled today? 485 top, 394 bottom. Wow, 85 plus 4. 85 plus 6, 91 points. Dang. 91 points travel. The whole entire daily candle. Now let me show you how to capture that. Alright. Okay, hindsight bias, but this is the exact trade. This has been the cleanest price action so far throughout this whole entire week. Actually no, I think Tuesday's retest on that bullish breaker block was probably clean as well. 2.2 to 3 point risk. This is as clean. Okay. So market opens. Ding 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 right here. 9:30 a.m. New York time. This whole pump, you might be thinking to yourself, damn, I missed the move. Do I FOMO in? What do I do? As a good trader, you will probably not do anything. As a good trader, you'll wait for a setup and let that setup be the ride that takes you to profit. So I saw this waking up and I felt FOMO. I mean, you can't help but feel FOMO, especially on a big ass move going from 408 to 44. Oh my god, that's 40 points, man. 40 points and you just waking up. $4 movement, god damn. Anyways, that's not what we're here for. All right, let's assume we're here, right? So the market opened, 30 minutes has gone by, you missed this initial pump. If you're a good trader, you stay out of it. Because where do you enter? Just think about it. Where can you enter here? Okay. So what I did was I waited. As you should with any good setup. You wait for the setup to come to you. You wait for price to tell you that this setup is forming with the narrative in mind. And if your narrative matches the setup that's being shown to you on screen, then you put your risk on, accept the risk, and let your position play out. You don't need to worry about profits. You don't need to worry about how high it goes, how low it goes. All you need to know is, this is my narrative. This is the setup I'm given. This is how much I will lose if the setup fails, and I will accept that loss if it does come to it. And if that loss is big enough or small enough to allow me to keep trading, if it's within my comfort zone, then take that trade. All right, let's draw some lines. Love me some lines. Oh, actually, straight off the bat, this is a sell side grab, right? Sell side liquidity grab. Right here. This is where the sell side liquidity grab happens. Look to the left of it. Swing high right here. Swing high. But hold on. Hold on. What else do you see? A good friend. VI. Volume Rebalance. Love these suckers. You'll see why. You'll see the reason why. Okay, so before we continue, let's look at this really quick. This risk profile is 436 to 433, right? 3.5 points risk profile. But we have this volume imbalance down here, giving us a good place to put our entry. which cuts our breaker in half, which cuts our risk in half, right? Think about it. You get in here at 435. The risk that you told yourself is 4433. If you, and that's a 2-point risk now, right? 435, 4433. Yeah, 2-point risk now. So instead of your 3.5 risk, it's now a 2-point risk if you are able to capture an entry here, which you can. You're trading, you just put a limit order in there. So if I problem is I can't do limit orders for some reason, so I did only 3, even though it fits within my criteria. I think it's because it was 3.5 risk instead of the usual 3-point risk, which is why I probably did 3 instead of 6. But either way, you know, following my rules, that's what's going to take you far. Straight off the bat, man, look at that. Straight off the bat, I feel you would feel FOMO right here, right? You would look at this going up and you would think, damn, I'm gonna miss this pump, and what do? Trust your setup, trust your breaker. So number 1, liquidity graph in the form of a sell side. Number 2, spot out your swing high market as VB. And 2.5, I have a 2.5 to this. Mark your if presence. That is where we're gonna enter. So I'm gonna cheat a little bit. I'm just gonna press buy, even though the price is not moving. So now let's see, where is our viable target? Viable target would be up here. All right, so I'll take 2 off at that spot. I'm hovering over the sell button as if I knew that that price is going to go there. Sorry, hindsight bias. Again, it's hard to time these exits, man, but we're still within our risk profile. I've accepted that I'm willing to lose 2 points on these 3 positions. All right, 3 times 2, 6 times 50, 300. Sell. Okay, horrible exit. Anyways, I took partials here, and I'm gonna let this one run. Okay. I'm gonna let this run even if I don't set a break even. Look at, I've already collected 800, right? I have 1 position left. I got in at 4435. My risk profile is down to 2.5, 2 points, right? 2 points is $100. Even if this came back down, even if it retested this breaker block, and for some reason, you know, it fails, it goes below the breaker block, and I exit, I'll lose 100 from this position. So I would have at least profited 700. Now think about that for a second. All right, low stress. This is a very low stress because we have that VI helping us with telling us when to enter. We have this breaker block, the swing high, giving us a clear indicator. It's low stress, man. Like, if you are in the rhythm of these things, you will find these things really easily. So what did price just do? Price just rebalance into this 1 minute VI. Great area to add in. Today, Thursday was a monster day. So let me pause really quick and actually show you. So this is the daily candle. Remember the 90 point something move? This is what we're looking at right now. What we're seeing here is this whole entire candle going up, right? And we're currently at 4452.75. 4452 would put us around here. So we're not even at the half. We're barely past the half of the body of this candle, and it still has a lot more room to go. Hindsight bias, but you see what I put here: 421 sell side liquidity. So if you pull up your ES chart, I'm not gonna do it because it's gonna fuck up my trade. If you pull up your ES chart, go to your go to your daily, and then, you know, zoom out all the way back to here. This is ESU, so it's not going to show you because there was not a lot of action back. Sorry, there's not a lot of price trading happening on this contract, right? But if you pull up the collective ES chart, you will see that there was sell side liquidity on the daily candle right here. That's what I have marked, and that's what I targeted as the, not the viable target, but as it got closer, like within 30-point range, I knew that price would eventually overtake that and revisit all the liquidity that was there. Again, hindsight bias, but I'm just telling you my thought process that I was thinking throughout these trades. So great area to enter to add more into your VI here. We're very far away from where we entered. This is a very stress-free trade. Once you get into the rhythm of these things, they become extremely stress-free. So there was actually two breaker setups that formed. I will start to show you the next one in a bit. So it's lunchtime, 12 o'clock lunchtime. It's the dead zone. Usually try to not trade between 9 to 10 Pacific time. So let's practice adding into a position, right? Because we know how to enter into a setup now. We got into the rhythm of that. Now let's see if we can actually practice adding into a position. Rough. This is a very rough swing high demonstration. Let's see it. Will price come back down to this VI? Possible. I'm gonna buy it. Now you're probably asking, where do you put your risk away? You just went 4 in, right? Well, I have this setup drawn out for you. This is my breaker block, 454, 451. 2.25 points, 2.25. No, yeah, close to 2 to 3 point risk. We had a VI again. That was my entry, right? That's where I wanted to enter. So that position, those 4 positions that I just entered, I would have exited if price came below this region right here, below this breaker block. I would have just taken that 4. I still had that 1 from down here, so I'll continue to let that 1 ride, but that 4 I incurred a loss on, right? That was its own entity. That's how you got to think of it if you're going to add into positions. Okay, so let's continue this. So going forward from here, these 4 positions are just for the sake of this video. I didn't actually add. I'm trading this live. Look at that. Look at that. I'm about to get stopped out. Boom, stopped out, right? There you go, stopped out with my 2 positions. Now what do? We just wait for the next setup. So let me show you something. I entered here at 12:25, 12:34, and I got stopped out here at 1 o'clock Eastern time, right? This is lunchtime. I traded lunch. It was choppy, even though there was a setup. The setup didn't come to fruition, right? But I just showed you an example of getting into a breaker that forms, and then what you do if it doesn't go according to plan. You get out, take your loss. So erase that, you move on to the next one. So this sell side right here. And you can move on to the next one, meaning you keep drawing your lines. Just keep drawing your lines. Price wanted to come back down to this VI, seems like. So pause. I like the sell side here. This market. I like this swing high right here. This market. Again, you can't pause in real time, but price doesn't move this fast in real time. You have more than enough time to draw these things out. Buy in. What is this? 451. This is great risk. 2 points, 2.5 risk. I will take that. I will take that 2.5 risk. Now let's let it play out. Right, viable target. Where do you guys see a viable profit? Right here, viable profit. We will take partials at this viable profit area. I think this is a really good demonstration of how to handle losses, accepting that the next setup is gonna make you forget all about it, right? So I'm taking partials here. Yeah, man. Let's go. So this is where we're trying to hit. Remember, this is the sell side, the 421 sell side liquidity. So I say sell side because this was the closing candle. Where I've drawn the line was where the candle, it was a down closing candle, I believe, and I marked it as sell side for that reason. You can pull it up on your chart and look at it on your own. So this is where I'm going to take my next partials. Oh man, 1 hour into the video. I apologize. I've shown you a lot of setups though, so at least there's that going on. I think that we went over 4 or 5 setups today in this 1 hour video. So cumulative, I have 1.9K in profits off this simulation. The total that I made today, Thursday, was actually 2.6. Okay, so sorry, I had a phone call come in. Let's continue to play this out. It's taking a while. Let me get to my part, get to my take profit zone. Boom. All right, and we have one more position, right? Still letting it run. Okay, so this is a runner. You just let it run, right? To the end of the day, wherever you let it run, and you just accept your loss. You can take break even or have a trailing stop loss. But for the sake of this simulation, I'm just gonna flatten it. So 4.6K, 2 wins, 1 loss, right? Not too bad, not too shabby. I showed you a initial setup with the VI rebalance that jettisoned up, took partials at the viable profit area. We let that single runner run all the way up here, right? Theoretically, that single runner went all the way up here. The second entry was what I assumed was a breaker that formed here, with the swing high here, sell side taken here. I entered over here on the retest, entered again on the volume imbalance retest, and of course this was during lunchtime. What happened? This breaker didn't come to fruition, so I had to take the stop loss here. Took it for an L. Took it for an L, small L, but you get the point, right? That was the risk profile that I accepted, and I said I will take the loss if it invalidates, and that's exactly what happened. So then what happens next? Wait for the next setup. That's all you have to do. Wait for the next setup. Sell side gets taken here. There's their swing high, your risk profile, 451, 449, great risk profile, right? 2.5 points. 2.5 points. I'll take on 6 positions here, but I took on 4. And then the first viable take profit area up here, took some profits. The next one was the daily target up here, took profits partial, and then let the other one ride to Valhalla. So that's it. That's, I believe, 4 or 5 setups that I went over for this week. It's not even Friday yet. Let's be honest, do we even need to trade this Friday if you've made this much money? Right? Take Friday off. Go enjoy it. I hope you guys enjoyed the video. This was definitely a raw voiceover past my bedtime type of video. So keep hustling out there. Keep adding to your screen time. You'll get the rhythm down. And you know, if these terms are kind of foreign to you, go watch the ICT video, 2022 mentorship. Get familiar with all the terms. Get a lot of screen time in before you use real money, and you'll get into the rhythm of all these setups. And again, I want to stress, focus on how much you are willing to lose. Focus on that, and then your mind will shift to a point where then you're gonna allow yourself to have runners that start from here, right? We bought 4435 and end at 4474. That one runner netted 40 points, right? 40 points, 30 points, 40 points. It's 2K, man. So there you go, $2,000 with a $150 risk. That is pretty damn good. All right, have a good one.